the third problem, you'll be filling out T accounts. And one thing that gets confusing is the income summary account, because the income summary account, you have to balance twice. It may not make sense why you're doing that, but when you're going through the closing process, the credit entry that you'll make the income summary is going to be when you are closing out the revenues, and the debit entry that you make to it is when you're closing out the expenses. And then you balance it where it says 8,700 balance. You calculate that. That means that's the amount of net income we got for the period. But then when you close it out, then you have, to zero out the income summary, you'll have to make an $8,700 debit entry to it. That's a closing entry, and that brings it down to zero. So notice that you enter a balance for it twice. The first time you enter a balance so you know what to do to zero it out with your closing entry. The second time you enter a balance, you do it to show that you have in fact zeroed out the account. So don't get confused by that, but you will have to enter a balance twice for the income summary account. Whereas for the other accounts, you would typically only enter a balance once.
I do find that confusing because the credit would be still higher than the debit. Or do you not subtract that?
Well, first you would be looking at the 23,600 credit and the 14,900 debit. So that gives you an 8,700 credit balance. Then to zero it out, you enter an 8,700 debit. And then that, looking at these two numbers, that brings you down to a zero balance. But yeah, a lot of people get confused about it, and you'll have the same issue when you do the comprehensive problem. You go through the same steps there. So I don't know how else to explain it, but I'm just trying to warn you that that might get confusing when you get to that. But just remember, you balance the account twice. Okay, then I'm going to go to the practice problems for chapter 4. And we're doing closing entries here. And so we have an adjusted trial balance to work with. It says start by closing out revenues. So we see on the adjusted trial balance that there's only one revenue account listed, service revenue. It has a credit balance of 85,000. So that means to zero it out, we're going to have to debit it for 85,000. So service revenue, debit 85,000. And then that means that automatically the other side of it is income summary. And at the bottom we put to close revenues. And then close the expense accounts. So here on the first line, I'm gonna put income summary, but I won't fill in that dollar amount until we know what all the credits are. So for our credits, we go down to where the expense accounts are. And the first one that's listed is insurance expense. And to zero that out, we would have to enter a credit of 26,000. And next one would be salaries expense. Credit of 28,000. And supplies expense. $1,300. And utilities expense. $15,000. Depreciation expense equipment. $7,000. Depreciation expense building. $325. I think that was everything. So then, if we added up all of those credits, the amount that we would need to debit to income summary would be $77,625 to make our journal entry balance. And at the bottom, we would put to close expenses. Okay, then we would close income summary. So, go to Excel here. So I thought I was gonna do, retained earnings first. So, in our first journal entry, we did a credit to income summary of 85,000. In our second journal entry, we did a debit to income summary of 77,625. So now the balance in income summary is 7,000. It's a credit balance 7,375. So we'll have to zero out income summary. It means we'll have to debit income summary for 7,375. And then the other side of this journal entry is automatically retained earnings. And at the bottom, to close income summary. And then we close dividends. So going back to the adjusted trial balance, dividends had a debit balance of 31,000. So we're going to credit dividends. So it means the account we will debit will be retained earnings. 31,000. And then credit dividends, 31,000. And then at the bottom to close dividends. And then we will prepare the post-closing trial balance. This is the one that I thought we were doing a week or two ago when I said that it was gonna be tricky. And then it turned out it wasn't a tricky one we were doing, but this trial balance is tricky. And it's not, I'll fill out most of it very quickly. We won't spend a lot of time on it, but for the most part, we should just be taking the accounts that are permanent accounts from the adjusted trial balance and just filling them in the way they are shown there on the adjusted trial balance on the post-closing trial balance. So the permanent accounts for the most part don't change, but there's one big exception to the rule. Retained earnings, which is a permanent account, does change because of the journal entries that we just did in the closing process. So you'll bear with me, I'll just fill out most of this pretty quickly, and then we'll talk about what we do with retained earnings. So cash is a debit still of $20,000, just like it was on the adjusted trial balance. Accounts receivable, debit of $2,900. Office supplies, debit of $1,150. Prepaid insurance, debit of $2,700. Land, debit of $20,000. Building, debit of $145,000. Accumulated depreciation building. This is a contra asset account, so it has a credit balance, $7,000. Then equipment, debit of $43,000. Accumulated depreciation equipment, credit at $20,000. Accounts payable, credit of $4,800. Utilities payable, credit is $625. Salaries payable, credit at $3,800. Unearned revenue, credit at $1,900. Common stock, $106,000. Retained earnings, that's the one that's tricky. Okay, so I'm going to go to Excel now, and we're going to change this T account here to retained earnings. In our closing journal entries, closing journal entry number 3, you can see that we made, well, let's start with the beginning balance in retained earnings. What was that? It was, on the adjusted trial balance, it had a credit balance of $114,250. Okay, then let's go to our two journal entries. The first one that affected retained earnings, you can see had a credit to retained earnings of $7,375. The other one that affected retained earnings had a debit to retained earnings of $31,000. So now to balance the retained earnings account. Oh, what did I do? The balance in it would be a credit of $90,625. So that's what we want to enter here in our post-closing trial balance for retained earnings. The tendency might be to just copy retained earnings from adjusted trial balance, and if you do that, it's obviously going to be wrong. So now, if we add up our total debits and credits, they should each come to $234,750. Then compute the current ratio for Mark's bowling alley. If you took the accounts that are current asset accounts, it would, I'm not going to spend much time on this, it would be cash, accounts receivable, office supplies, and prepaid insurance. Those four accounts would be current assets. They say, first of all, they want us to give the formula. So it would be total current assets divided by total current liabilities. So those four current asset accounts added together are $26,750. Then the current liability accounts, those would be accounts payable, utilities payable, salaries payable, and unearned revenue. So there are four of those. Those added together would be 11,125. So the current ratio would be 2.40. Okay, then I have some multiple choice problems here you can help me to answer. Balance sheet that lists the assets above the liabilities in stockholders' equity sections is a what balance sheet? Remember the term for that?
Was it the audited?
Nope.
Account form?
Not account form.
Report.
Yeah, it was the report form, yeah. Okay, here's some data for a company's accounts. What is the total amount of long-term assets that should be shown on the balance sheet? So this is actually kind of a tricky one. So I'll go back to Excel here. So it would include the building, which is 140,000. And then it would include furniture, 7,000. And then you have to subtract the accumulated depreciation on the furniture. So minus 1,000. And then the land is 34,000. And then subtract the accumulated depreciation on the building, 4,100.
Pretty good.
And I guess that's it. So
175.
so adding those up, I get 175,900. Okay, when preparing a worksheet, net income is recorded in the where? Remember this?
It would be B.
Income.
B? Yeah. There's income statement debit column. Another correct answer would be balance sheet credit column, but that was not one of the answers that they provided for you. Okay, prepaid rent in the worksheet's unadjusted trial balance column is $5,000. Prepaid rent in the balance sheet column is $3,000. Which of the following entries would have caused the difference?
D.
Yeah, I think that's right. So I think in the adjustments column, it would have been a $2,000 debit entry to rent expense and a $2,000 credit entry to prepaid rent. Which of the following is true of a completed worksheet?
Total debit income equal balance credit balance sheet.
I don't think so. I think it's the last one. Yeah. Now, it depends on how you interpret this, because even this answer is only correct if you put net income at the bottom of those columns to make them equal. They're not equal before you put net income at the bottom, but if you put net income at the bottom, then D would be a correct answer. Okay, which of the following statements is true if the income statement debit column exceeds the income statement credit column of a worksheet?
Is it net loss?
Yeah, the company incurred a net loss, correct. They had more expenses than they did revenue. On the income statement columns of the worksheet, the debit column totals 9,000 and the credit column totals 11,000. What is the amount of net income or net loss?
21 net income.
Yeah, 2,100 net income. Good. Which of the following accounts balance is carried forward to the next accounting period?
Accumulated depreciation.
Yeah, good, accumulated depreciation, that's a balance sheet account, so it would be carried forward. Which of the following entries is necessary to close the appropriate depreciation account at the end of the year? Well, the account you'd close would be depreciation expense, it would not be accumulated depreciation. And an expense account normally has a debit balance, so you would close depreciation expense by crediting it, so the correct answer would seem to be D, you would debit income summary and you would credit depreciation expense. Okay, Martinville Inc. earned revenues of $14,000 and incurred expenses of $4,500. The company declared and paid cash dividends of $2,500. What is the balance in the income summary account prior to closing net income or loss to the retained earnings account?
Credit balance of $9,500.
Yes, good. Notice the dividends don't have anything to do with it. It's not part of the way you compute the net income. What is the net result if the amount of net income for the year is less than the amount of the dividends?
Retained earnings decrease.
Yes, retained earnings decreases. Which of the following accounts will be included in a post-closing trial balance?
Unearned revenue?
Yes, that's a liability account, so it would still be there as a permanent account when you do the post-closing trial balance. Closing entries are journalized and posted when?
B.
What did you say?
She said B.
B is in boy?
Yes.
Okay. Yeah, I think that's right, after preparing the financial statements. The current ratio measures what?
Company's ability to pay current liabilities from current assets.
Yes, correct, D. Ability to pay current liabilities from current assets, yes. Okay, that's it.